I want to start out by talking about the slew of companies that are heading towards IPO right now. WeWork just announced yesterday that it's joining Lyft, Pinterest, another stable of companies. How does that change your investment thesis?
Well, I'd like to remind everybody of a fact that we've seemed to have forgotten in the last 3 years. There was a time on the New York Stock Exchange where you couldn't take a company public that wasn't profitable and that didn't have certain balance sheet metrics, and it was considered the highest quality index in the world. And today, obviously to be competitive, they've thrown that rule out. These companies make no money. They are not profitable, they have no cash flow. They are not investments from my point of view, they are speculations. There's nothing wrong with, let's take Lyft, which was a disaster for shareholders that bought it after it started trading. You've lost as much as 31%. The company can't tell you if it'll ever make money, ever, or it'll ever be cash flow positive. You're making the assumption that one day they will be, and that's okay because obviously this is a very popular program. They have a massive competitor in Uber, so I'll give you an example of something to be concerned about. When that went public, I happened to be on the steps of the Soho Club on Collins Avenue in Miami, where Uber and Lyft are immensely popular up and down that 12-mile stretch. There was a woman standing there doing something I hadn't heard of before called jamming. On one phone, she had Uber, on the other phone, she had Lyft, and she was canceling rides back and forth to get the lowest price at the fastest pace. That, Caroline, is called a commodity. And so I said, what about loyalty to one of these programs? She said, who gives a damn? I just want a car to drive me 2 miles to go shopping on Lincoln Drive. And it hit me like a ton of bricks. You should be an investor in Uber or Lyft as a ride participant because they are subsidizing about a third of the cost of that ride. So I say I use both services and I thank all the shareholders who are losing all that money on my behalf. Thank you.
So let's talk specifically about WeWork. I'm assuming you're not bullish on them for the same reasons, but what were you thinking yesterday when that announcement came out?
I think he's brilliant. I think he's a fantastic entrepreneur, and he's doing this at the right time because that model has gone bankrupt multiple times before. What happens is you arbitrage the risk of short-term leases with long-term debt. So you go buy a building, you put debt on it. It's very, very often variable debt. It may reset every 3 to 5 years. When rates go up and there's an economic slowdown, as in a recession, you go bankrupt. So no, I won't be investing in that, and I've seen this movie many times before. But is he a great entrepreneur? Absolutely. If you invest in that, you should realize that's another money loser right now. And if the economy softens or rates go up, I think you're basically screwed.
And you mentioned that we are late in the market cycle right now. How else is that impacting your investment thesis and what you're looking at?
Well, I'm not sure we're late. I'll tell you my investment thesis for U.S. domestic small cap and large cap. We have a very extraordinary period occurring right now. I have the benefit of looking at the income statements and balance sheets of 50 private companies that are in my private portfolio. They're all domestic, they're across almost every state and almost every sector. We're having the best quarter we've ever had in free cash flow, ever, for one singular reason, deregulation. It's not even tax reform. So the way I look at it, we just printed 3.2% GDP, which is way ahead of what everybody thought. That's probably because we're deregulating the U.S. domestic economy. And we still have a Chinese trade deal which may provide a really good lift for the S&P companies that do 47% of their sales abroad. So I'm staying fully indexed, fully weighted. 60% of my portfolio is in a mixture of 40% large cap, 20% small cap, domestic companies, US. I don't think we're in the 8th inning. I think we're more like the 6th with lots of upside. And I don't think this current administration is going to lose the White House in the election because they're going into it with a buoyant economy and no unemployment. So the policies will remain the same.